back to Brashenomics, everyone. Heather Moore filling in for Ben Brashen. We're doing Heathernomics today. And right now we have John Miller with us, a partner and CPA with GDM Private Financial Solutions, who joined the group after working at two of the largest multinational accounting firms in the world. John, how are you?
Pretty good. I think I share your love for the sunny days.
I know. I think I get a little too excited as people start thinking I'm acting a little weird. But I mean, I've lived in Seattle my whole life, and I think you really appreciate those couple months, and especially when everybody says how summer starts July 5th.
Right.
When you get it before.
Yep.
It's super great.
Well, for me, it means mountain biking. So
yeah, that's what you said you're
at,
doing this weekend.
Yep,
that's
fun.
Right. Well, I am no tax expert, but you are, and you brought some issues to discuss with us today. So I'll just let you kind of give a rundown of what we're going to talk about, because it looks like some good stuff here.
Well, first off, Heather, is in fact, we talked about this in my office the other day, and we have a looming deadline for anyone that has foreign bank accounts. Now,
how common is that?
You know, actually, it's quite a bit more common than you think, particularly in an area like Seattle or Silicon Valley, and that's because you have a lot of individuals who have come here from foreign countries and work for high-tech companies like Microsoft, Amazon, and Google. And inevitably, almost all of them have foreign bank accounts. And it's just because they lived in India or the UK or Ireland before, and now they're living in the United States.
So these aren't like offshore accounts, hidden accounts?
Yeah, I think the problem is, and what my clients have always said is, well, we didn't know. We weren't trying to hide money. And I say, I know, but these are the laws that the United States has.
Because some people are trying to hide money.
Because some people are trying to duck and cover. But the fact of the matter is the government set up a law to go after the cheats and the people trying to skirt the tax laws, and yet it's affected good, ordinary people who, you know, didn't really intend to hide money, but nonetheless, they're covered by the law, and the penalties are substantial.
Really?
Yeah, actually, it's $10,000 fine for every violation, and it can include criminal penalties. So people can go to jail over this.
No one wants that.
No. And so the biggest thing to recognize is we have a June 30 hard deadline, and that's not when it's mailed. That has to be in the hands of the U.S. Treasury by June 30. So.
And that's not anything that you can get an extension on, like you can't.
No extensions.
Taxes. Okay.
No extensions whatsoever.
Deadline.
And part of the reason that's hard is we have to do all the foreign currency translation. So, you know, you have to value it in U.S. dollars. And so I'm busy doing some of that for some of our clients now. And it doesn't apply to everyone. You have to have a value of greater than $10,000 in your bank accounts at any point in time during the prior year. But nonetheless, that can kind of slip up on you. So, you know, if you're close, if you think you're at 8,000, it's worth having somebody just kind of go through and do the math so you don't get in trouble.
Absolutely. Well, thanks for that heads up. And we had another thing to talk about today, too.
Well, I think it's also a good time to think, you know, we're kind of at mid-year, you know, and June 15th, second quarter estimated tax payments are coming due. So it's always a good time to kind of take a look at some tax planning. And so I always say, you know, there's several principles to tax planning you kind of got to look at. First and foremost is yeah, exactly. And, you know, probably first and foremost is there's no shortage of forecasting and financial modeling that you can do. The reason I say that is, let's say you got a bonus this year and you think your company withheld enough. Point in fact, actually, companies typically only withhold 20% on a bonus. If you're in a 28% or higher tax bracket, you've automatically underwithheld. I've had clients where that happened to and didn't find out until we went to do their tax return.
Like, eek.
So it's always kind of a good idea to just check in with your accountant and say, hey, you know, I just want to, you know, give you my wage statements or give you my books and records if you own a business and see where we are. And then we actually did this with a client recently where they both are employees. They gave me their W-2s. We looked at where they were year to date. We did some modeling out through the end of the year, factored in some potential bonuses and everything, and they were quite underwithheld for the year. So we had to make some decisions like, do we increase the amount we're going to contribute to our 401ks? Or are we going to increase the amount we're going to pay for estimated taxes or our withholding?
Right.
But at least we're doing that in June rather than April.
Like when you have to catch up on like 6 to 8 months instead of
we're synchronizing it with the cash flow.
Yeah.
If we do it next April, guess what? We're already behind for 2014 too.
Yeah.
So we don't have a 6-month problem. We have a 1.5-year problem.
Yeah. So those are the 3 principles. Did we get to 3 yet?
No, we didn't, but there are a couple others real quickly. And one is just kind of, when we talk about business entities, which I'll talk about in a moment. So a lot of my clients have their own business.
This is a popular area to have your own business.
It is.
I work for an LLC.
Did you?
Yeah, I've done it.
Well, we'll talk a little bit about LLCs, but make sure you're choosing kind of the right accounting periods and methods. Now, that makes no sense to most people.
No,
but,
I'm kind of like,
but when you're working with your own business, sometimes you don't have to have a tax year that ends on December 31st.
Okay.
You can actually have it end September 30th or June 30th. And there are some benefits to having a different year end. Sometimes a deferral of income. Sometimes it's being able to plan a little bit more, some tax deductions and then some cash flow that you need to work in, again, if you have withheld or underestimated the taxes. So there's some choices in there when you carefully select the periods and methods that you're going to operate under with your business. And then finally, just structuring the whole tax plan to your goals and your situation. Too many people make it way too complicated. I'll never forget earlier in my career when I wasn't so smart, developing this really nice, snazzy tax plan for a client, saved her like $15,000 a year in taxes. And she said, I don't care about saving that money. She said, I just want it simple.
Okay.
And so, if that's what we need to do, then that's what we need to do. Not everybody wants to save tax money. Sometimes people just want their life simple.
Now, that's a little hard for me to understand.
I know. I couldn't understand it either because I said,
she wanted a more simple tax plan so she didn't have to go through everything with you and just wanted to forego that.
And it wasn't really a lot of
additional.
It wasn't really a lot of additional work, but for her that was important.
Okay.
And so I think sometimes everybody's different, but again, even like Glenn alluded to, sometimes there's special needs situations, and you have to kind of factor in the unusual factors and modify the tax plan, the entities we use in the business to the unique situation of the individual.
John Miller joins us, CPA with GDM Private Financial Solutions. Just have about 3 minutes left here, and we were going to talk about, talking about tax planning with entities, and why don't we go over some of those entities?
Okay. So first and foremost, and probably what I see the most, and it's just because it's easy as a proprietorship. Doesn't take a lot. You go to the Washington Department of Revenue, you take out a Washington State business license, you go get a local city business license.
Trouble is, just you.
Yeah,
right?
It's just you.
It's just you.
Trouble is, that's probably not the best structure for a whole bunch of reasons that we can talk about, but one of those is tax, and so I'm typically, as quickly as possible, striving to move people out of a proprietorship, if for no other reasons, some of the things that attorneys would tell you about, but also some tax reasons. Second would be a partnership.
Is that what you move people into? Is that the next step? Is that the next
No,
best
a partnership, really, you go from one owner to more than one owner. Now, a partnership, sometimes you have to operate as a partnership. So, for example, certain healthcare professionals are required under law to have to operate in certain entity styles because the government wants their liability to be on the line so that they don't practice in a way that's negligent. So,
do some people not know, though? Do some people practice under the wrong entity?
Well, I don't know. I suspect as much, but I hope not. But I think under a lot of licensing jurisdictions within the state, a lot of times they catch the way they're doing things, but there probably is some that slips under the radar. Partnerships we also use for a lot of real estate investments. So anybody that has commercial and residential real estate, we typically like to stick in partnerships, and again, there's some tax motivations behind it. And then I guess finally we have the corporation regime, which is where we typically strive to move our clients, unless, again, it's like real estate or a profession that requires them to operate differently. But in that category, we have what we call S corporations and then subchapter C corporations. And a lot of people hear about the S corporation. They think, I'll save a lot of money with S corporations. But it's important to recognize that you can save a lot of money with C corporations as well. For example, if you are a 2% or greater shareholder of an S corporation, you can't deduct health insurance in the corporation.
Okay.
that might be important to you
Yeah.
if you're providing health insurance for your family and want that deduction. Now, you can deduct that sometimes on your personal return, but under certain income guidelines and things, you might lose that deduction. So it might be important to stick that under a C corporation. And also for medical expense reimbursement, certain types of insurance that are provided to employees. For example, there's a cool tax planning method we use with life insurance.
I haven't heard tax planning referred to as cool in a while.
Oh, yeah. But we use a life insurance product with some of our life insurance agents out in the area. And it allows us to get a deduction at the corporate level. And then they can pull out some tax-free income in retirement later on. And it's just a slick little feature that we can use with a C corporation that we can't with an S.
Right.
So there's a lot of things with these different entities you can do, and it's sort of like a puzzle where you're just kind of moving the pieces in. And as I said, you're looking at those principles of just doing some good financial modeling and forecasting to figure out what makes sense, what's the easiest, and then what's right for the client given their goals and needs.
Yeah, and if you are the client, this probably isn't something you're going to have the time or patience for. I talked at the beginning of the hour about getting people to help, especially when you have a lot going on. Tax code is hard. It is not something that you can really, in my opinion, do by yourself unless you've spent a lot of years studying it.
Well, and, Heather, I must admit, while I was waiting to get on the air here, while I was listening to Glenn, I have to admit I opened my iPad and I was reviewing some new regulations that were out from the IRS. That's disgusting given the day. Nonetheless,
but it
you
changes
do have to keep
so
it up.
often, too.
Every day.
That's just hard
Every
to
day.
keep track of. I mean, if it's even even if you're studying every day, think of what the average person would go to.
And it could be a little intimidating and overwhelming, even for those of us that practice. Sometimes things change so quickly, it requires us to really spend quite a bit of time in continuing education just to keep up on the changes in the tax law and then personal study. So I spend a lot of time outside of the office just keeping up.
That's good. Well, whether you're tax planning with entities or tax planning and you just have a simple W-2, don't do it on your own because it's hard. Get help. Get help from John. Thanks so much for joining us, John. That was John Miller, CPA with GDM Private Financial Solutions. And when we come back for the first time, Monica Ulmer will be joining us from Heaton Daynard. You're listening to Brashonomics. I'm Heather Moore, and we'll be right back.